Open your cerebral cortex and shift your lobes into upper beta phase, because you are going to have Bitcoin knowledge transmitted directly into your vestibulocochlear. Your host of Bitcoin Knowledge is Trace Mayer, an early Bitcoin advocate since it cost $0.25, but this is not intended to be investment advice. A doctor of jurisprudence, but this is definitely not legal advice. And an investor in core cryptocurrency infrastructure, including Armory, BitPay, Kraken, and Mitagio, but this is not a recommendation of those services. Here, you get fed via direct mind download with pure and free Bitcoin knowledge.
Okay, welcome back. We have an awesome interview today with Will O'Brien, CEO and founder of BitGo. Welcome to the podcast, Will.
Thanks, Trace. Good to be here.
So, BitGo, they raised, $12 million?
Just over 14, actually.
Oh, just over $14 million.
Yeah.
So, a big cash treasury. What brought you into Bitcoin? What does BitGo do? Why did you decide to start it?
I got into Bitcoin in 2012, became pretty obsessed with it rather quickly. My background is in a combination of technology, fintech, and then startups in the consumer space, in the digital publishing space, in the payment space. I have a combination of technical background, Harvard Computer Science, and a business background, MIT Business School. And among all of those experiences, both educational and professional, I immediately saw that Bitcoin is so pervasive that it literally touches on everything I've ever done in my professional career, and to some degree my personal life and visions and ambitions as well. And so that's really what drew me in. I've always been attracted to disruptive technologies, but I think Bitcoin has this potential to change the world and really revolutionize things in, I would argue, a way bigger than the internet did. So in 2012, I discovered Bitcoin. Everybody has their kind of own story of who told them the first time and what the price was at. I couldn't really figure out the right way to get into Bitcoin. So I started a combination of trading on volatility. I wrote my own trading algorithm and was just trading against the run-up in 2013. And I was also started publishing a variety of content, getting involved in the community. I was looking for areas to angel invest or perhaps start a new company. And I was fortunate enough to meet my co-founder, Mike Belshi, who's a 20-year technology veteran out of Google, Microsoft, and other companies, who had built some really incredible technology now known as multisig. And he was the first one to bring this to market. And I saw the opportunity with Mike and with the board and the team we had started assembling to build a platform company and also build one of the first major trusted brands in the space, focused on security, with also an initial go-to-market strategy around enterprise, which had been largely neglected to date, mainly because Bitcoin had only become mainstream to some degree in the press throughout 2013. And so when Mt. Gox collapsed in early 2014, people were looking around and saying, hey, is Bitcoin dead? What do we do? How do we secure our Bitcoins? And luckily, we've been working on a platform for about a year and a half, and we're able to bring to market a product at the time we called BitGo Enterprise, which was a institutional grade web wallet with multi-sig technology baked in. So that large hedge funds, OTC trading desks, exchanges, miners, and others could start to operate their finance teams in Bitcoin the way they did with traditional bank software, where you have spending limits and you have other types of corporate protections and treasury controls. And as we progressed with the company, we ultimately launched access to our overall platform as an API and started to power some of the largest exchanges like Bitstamp and others. And so my evolution was, I fell in love with Bitcoin, but I really love operating companies, and I wanted to get back in the saddle. I was lucky enough to meet Mike through an investor, and then also we brought on Ben Davenport as our third co-founder. So we have a great co-founding team. We've raised, as we said, $14 million. We have a great board and investor group and team based in Palo Alto, California.
Yeah, I've actually rubbed shoulders with Ben a little bit and other investments. And just last night, I was talking with Michael Perklin at C4, and he's been working on a lot of these crypto security standards. And he said that, Mike Belshi, along with John V over at Armory, have contributed quite a lot to these crypto security standards. Do you think that's an important area for the industry to focus on and try to get security standards out for like best practices and things of that nature?
Absolutely. I think standards are critical. If you look at the history of other industries, in particular the internet, in 1993, 94, independent companies were trying to solve the problem of securing sockets and communication. And SSL was actually a kind of a project inside Netscape, which then became a standard, which then got embraced by companies like VeriSign. And through those activities and through embracing a standard, we're able to see this growth in e-commerce and internet publishing. So today, everyone types in HTTPS on their internet browser, but that was actually the work of a bunch of proprietary companies trying to figure things out and then collaborating on a standard. And so I actually think in 2015, through work that we're doing and in collaboration with Michael at C4 and with others like Armory and others in the industry who have this domain expertise and years of experience, I think we'll see the emergence of standards. So standards like multisig, standards like HD wallets, and other things that are really critical to both privacy and security and helping entrepreneurs and businesses scale. I think for many years in the short life of Bitcoin, in the first 5 years, everyone took kind of a DIY approach at building systems, security, scaling, whatnot, and that has led to a dramatic amount of loss and theft. And we're really at a point where we need to hit that inflection. We need to change that tune and see the industry embrace standards and say, you know what, I'm not going to go reinvent the wheel again and just kind of roll my own single key hot wallet. I'm going to use some of these best practices. And those best practices will be codified into standards, and those standards can be audited and insured against, and that's really what will move the industry forward and help it grow.
I interviewed Brian Donegan from the Isle of Man government. You know, they're pushing through legislation, adding an amendment to a Proceeds of Crime Act, and the two main prongs of what he wants to get accomplished is, one, to protect customer funds, and two, to keep crime out. So when we're talking about like protecting customer funds and these standards, I mean, if you're an insurance company, how do you really assess the risk of whether these Bitcoins are going to get compromised or stolen or sent to the wrong key or otherwise the company you're thinking of insuring is going to lose the customer funds? Because that's really like where the rubber meets the road. You kind of see these standards are just not even in place in the industry yet. We're working on trying to get them there. But once we get those standards in place, is that what you kind of see happening? The insurance companies being able to come in, the large corporate adoption being able to come in, and then Bitcoin really being able to deepen those network effects in terms of its nature as a protocol.
Yeah, I do think that insurance for Bitcoin companies and the other activities around there will follow a similar pattern as previous industries. That first, the insurance companies will take a conservative and hesitant approach towards something that's new because they don't get it. And then there will be one or two underwriters that will say, okay, let me back a particular horse. Let me get behind this company. So BitGo was fortunate enough to be one of the first companies to bring out custom Bitcoin theft insurance from a global A-rated insurer, and that has potentially be a watershed event where other insurance underwriters will get it and will say, okay, now we know that there is a standard that can be insured and we can calculate this risk. To date, really, the insurance around Bitcoin has just been basic crime policies. You know, will an employee on site steal a private key out of cold storage? And there's so many problems with that. You're limiting the potential coverage to on-site theft by employee. You're limiting the implementation by the company to cold storage, which is then keeping those Bitcoins on ice instead of mobile and useful. And so I think what will happen is the first major underwriters get behind this and others will follow suit. There will be some proven models. There will be a track record, and then the price will come down. If you look at past insurance innovations like Y2K insurance or reputation insurance or D&O insurance or cyber insurance in the first part, all of these came out because somebody had the wherewithal and had the courage to say, I can calculate this. I can figure it out. Yeah, I don't have 30 years of actuarial data, but I can take a run at it because then maybe I can own the market. And so that's what's happening also, I think, in 2015, is that some of the larger institutions, whether it's the banks or it's the insurance underwriters or it's the auditors, are saying, okay, Bitcoin is relevant enough that I should be answering the question, what is my Bitcoin strategy and how do I get into that business?
Yeah, and if you're the large corporate company, to have a fiduciary duty, you're going to have to make sure that the keys can't be compromised or embezzled or otherwise lost, insurance. Otherwise, you just don't really want to be playing around with it because you're literally playing with fire. You're holding the private keys to the money. You're taking that back from the bank. And so, yeah, I mean, I think it's a very important area to be worried about.
Also, there's an education gap that I think people in those industries, the insurance underwriters, see insuring Bitcoin like insuring a rare baseball card or a piece of art, that if a private key is stolen, that's gone, or if it's destroyed, the Bitcoins are gone. And actually, it doesn't have to be that way. There's been a number of innovations and a number of companies embracing models like multisig. And then when you distribute multi-sig keys across multiple institutions in, say, a 2 of 3 scenario, then you can even lose a key and it's not a problem. You can have a company hacked and attacked and it's not a problem. That if you set up the right infrastructure, knowing that one leg of the stool may go out, then you can recover from that. And so I think we'll prove ourselves, I said track record before, I think we'll prove ourselves as an industry as we have more successes and fewer hacks due to companies like Mt. Gox that were never built to scale and never really built with these concepts in mind.
One of the things that we found very difficult at Armory is just being able to find people who've got the technical aptitude, the raw aptitude, the mathematical background, coupled with the computer programming ability to just justify us investing in training them in how to do Bitcoin programming. Have you run into a similar type of problem over at BitGo, like with acquiring the human capital necessary to do this type of work?
Well, actually, hiring in Silicon Valley in general is very hard. The real estate market is through the roof. The cost of living is significant. The larger companies are paying exorbitant salaries and paying to keep people. And so running a company, even as well capitalized as we are at our stage, is still a significant challenge. You couple that with Bitcoin being new, so you have kind of a selection bias. We really only hire people who are super passionate about Bitcoin and the opportunity Bitcoin has to change the world. If you don't have that spark, then you're not going to sustain the marathon that Bitcoin is going through. But from a technical talent basis, I think because we have incredible guys like Mike Belshi and Ben Davenport, that we found that technologists really want to learn and be mentored by them. And in terms of the brains behind the crypto and the Bitcoin protocol, you don't need 10 people who know all of that. You do need seasoned technology veterans who can drive the vision forward and really design the focus and, code review and algorithm review and whatnot. But there's also a lot of work to be done in other important areas like user experience, making it really easy to use, or how do you grow? Sometimes you grow through A/B testing or other areas. So we're about 70% engineering on our staff. We're 13 people now and probably doubling over the next quarter, so by mid-year of 2015. And so, we're continuing to hire with a predominant focus towards engineering, but we also want a well-balanced team because we're building a platform company that has a service component, has training to our customers, premium support, enterprise support for our customers, partnerships, and so forth. So we do bring in all walks of life, not just the product and engineering focus.
Just kind of had the thought, I'm sure we've got plenty of listeners that, might be in college or in high school or otherwise looking for a job. I know at Armory, we actually give them a very, very difficult set of math problems and then have them translate that into the appropriate programming language. What type of process do you go through there at BitGo when you're hiring people? Like, what do these people listening to the podcast that might think of coming to work for you? Like, what do they need to kind of expect in order to make it in the door?
Well, we hire people at all various degrees of their career, from new college grads to very seasoned, experienced people, and obviously align their work and their goals with that experience. When we're looking at somebody, I mentioned a passion in Bitcoin as a key selection criteria, obviously relevance and functional skills. And then, we definitely dig into cultural fit. That's really important for us. And I think when we're testing the skill set, it's really, is this somebody who can grow? Is this somebody who's shown independent aptitude? So I love it. Mike and Ben as hiring managers love it when they see somebody show up and they've got 3 different GitHub projects that are open source, Bitcoin things, just ideas they had. Doesn't matter if there were 5 checkouts or 5 million checkouts. It's just, did somebody do something on their own time and actually demonstrate that they can build a project to completion, think outside the box. That's really what is great. Personally, my overall hiring approach is I call it intrinsic motivation, right? I want somebody who's there because they are super excited about what we're doing, what we can bring, but also they have this internal drive to do their own thing, and that aligns with our vision. Don't want to hire somebody who just wants to, build a career at our company or get comped by our company because, it's the right place to be for the next few years. There's got to be something that they bring to the table that adds to the fabric of our culture.
We can definitely testify to that. We've created over 100 jobs between BitPay, Armory, and Kraken in this space. And one of our very best programmers, he's over there at BitPay, Manuel Aros, he created proofofexistence.com. He created all that all on his own. And that was one of the primary reasons we looked at him. I was actually going to hire him for a different stealth project, but then BitPay really wanted him. So we were like, okay, he can go over there. And he has just knocked it out of the park with stuff. So I think it's critical for people to understand, like, you can have this corpus of work that follows you around, and that becomes your resume.
Absolutely.
You don't necessarily need to send in a resume anymore. You just send in your GitHub profile, and it's like, hey, look, these are my commits, and the work speaks for itself.
There's really no excuse anymore, actually, to not do that. I know when I graduated from Harvard with a computer science degree, I basically had my internships and my body of academic work and the projects I did there, but there wasn't at that time the ability to just sign up for Amazon Web Services or build an app in the App Store. The barrier to entry nowadays is like $99 to do something. And so there's really no excuse anymore and you have this open source community of people who might actually engage with your project. So at this point, I think it's incumbent for people to invest that way. I'd say the same thing for business hires too. I get asked, I went to, got my MBA at MIT, and I get asked a lot by visiting my business school groups from variety of schools who have, contacted me over time. What should I do if I want to get into venture capital? What should I do if I want to become an entrepreneur? What should I do? This, that, the other. And I would say, go do it. What are you waiting for? Don't go start a company and think you're going to build the next Uber. Just go call up the VC you respect the most and say, can I donate 8 hours of each week to go do something for you for free for 10 weeks? Or go find an entrepreneur you respect and, say, hey, can I work for you on a project gratis, and just learn from them and see if you like it. And then if you do, you're going to get a reference, you're going to get some real world experience and go from there.
You're going to meet some people, you're going to build something. Who knows, what you build might actually start making revenue or start making money. You might catch, right. You might be the dog that caught the car.
Funny stories, I actually did that for Jeremy Allaire when he was running Brightcove in the early days of Brightcove when I was at MIT. I called him up and said, I'm really interested in video and, starting a business around video publishing, maybe, but I want to learn more. Can I just, bring a group of 4 students and work for you for free for 10 weeks? And he said, sure. And I got to learn a lot from that experience. Now Jeremy and I are, friends and peers in the Bitcoin industry as CEOs of respective companies.
Yeah, and for those that don't know, Jeremy Allaire, he runs CEO and founder of Circle, which I actually prefer Circle. Buying my Bitcoins, they've been great. You mentioned this kind of marathon that Bitcoin's in. I think a lot of people, they just track the price. They're very short term in their thinking. I've seen just lots of hot money come in and, then the tide kind of goes out, the price corrects, they just kind of melt away. We're left with a larger Bitcoin core in terms of people after each of these bubbles. But, with trying to scale up Bitcoin, all this stuff, like, what are you most pessimistic about in these cycles, just in Bitcoin in general? What kind of keeps you up at night?
Well, where I get discouraged is the scammers and the lack of maturity of how people operate businesses. Some people still operate like this is the wild, wild west. And where I get encouraged is that I'm seeing the entrance of serial entrepreneurs, institutional venture capital, major companies adopting Bitcoin. So there's really this kind of fork in the road that we're at. And unfortunately, there's always going to be the lowlifes that do bad things on the ecosystem. And that happens today all day long on the internet or on Google Ads or any other, or Facebook or any other major platform. But those platforms are all reach scale. And Bitcoin is in this, this dicey position where it would only take, a rewording of the bit license or some other kind of regulation or some kind of, other action to really set us back another 6 to 12 to 18 months. So I'm very optimistic and firmly believe that Bitcoin is here to stay. Bitcoin and blockchain is going to change the world. will become the backbone of our financial system globally over the next, say, 25 years and up. But I don't know what the next 2, 3, 4, 5 years are going to bring about. And every time there's a bad actor or a scam or a poorly run company or some kind of consumer impact or loss or theft or anything else, it just is discouraging because it's really just setting back innovation. It's us undoing ourselves as an industry rather than embracing. I think the same goes for over competition, right? It's way too early. We're in the sandbox here. It's way too early for us to be drawing lines and saying, we compete with you, you compete with us, this is bad, this is good. It's just too early. We need to kind of be building up the industry overall and defending the industry from the naysayers and the outside. So I think those are really more of the dynamics that are that we need to get over. But I'm optimistic that there will be perseverance. I think there's a lot of good people focused on doing good things. And as collectively develop more useful purposes for Bitcoin, consumer, institutional, or just pipeline oriented and backbone oriented, then I think that traction, that growth in market cap will overcome these other hurdles that we're experiencing today.
So, optimistic wise, I mean, did I hear you correctly? Like there's like a 0% chance of failure of Bitcoin, the protocol? Like it will become the protocol for transferring value over the internet, or at least in your mind, it's going to be something huge. It's over that point of no return in terms of like probability of failure.
That's my current bias. The logic behind that is twofold. One is that the blockchain has a barrier to entry that I don't think can be overcome, which is the distribution of mining power and the scale of the mining power. Now, the price dropping and miners washing out is testing that hypothesis. But if you really look at Bitcoin, grew up when nobody was paying attention. So, the large banks don't control Bitcoin. There's no government that controls Bitcoin. The security of the blockchain protocol is really based on this organic distribution growth. It's kind of, I call it an accident of history. It's one of these things that happened. And in the wake of the financial crisis, nobody really was going to believe that this digital currency could mean anything.
And the very people who should have understood it when it was released on the cypherpunk list pretty much dismissed it.
Exactly.
I mean, it's really kind of crazy.
So it kind of stood those initial litmus tests and then still grew to scale. And it has a scale now, although at 3 billion, it's small, but it had a scale of 14 billion that seemed like it was reaching escape velocity. I think what's then the next wave of that is the people and the institutional capital behind this. The folks that were really successful in the internet days, and even before that, the previous cycles of technical innovation, are now investing in Bitcoin as a major investment vertical. And the folks who are either straddling that fence or are new entrepreneurs, up and coming major entrepreneurs in the next generation, are focused on Bitcoin on a meaningful statistic, not 100% obviously, but a meaningful statistic. And I think that means that it has staying power. I look at, my company, we're a leader in Bitcoin security. It's fortunate enough to pull folks like the former CEO of VeriSign, who ran VeriSign for 14 years, onto the board. The former CTO Netscape is on my board. I got the founding president of eBay as a investor, the founder of Yammer and executive of PayPal as an investor and advisor. So we've got these folks that see Bitcoin as a second bite at the apple, and they really believe in it. And that much institutional weight behind this next wave of entrepreneurship between 2015 and 2020, I think, is going to push Bitcoin and blockchain. It's going to solve all the problems. We could identify problems in blockchain around, number of transactions per second, block size, all these technical details. That's a computer science problem. We could identify problems around regulation, and that's just a problem of managing through the jurisdictions that you live in. We could identify problems of adoption and what will Visa do. That's a problem of just building a useful case and then partnering. So I feel like all those problems are going to come to fruition, and any kind of new technical innovation that's crypto related should really leverage Bitcoin as a universal money supply and blockchain as a universal ledger. So sidechains is a project I like much more.
I love sidechains.
Much more than an altcoin. But I do think there's going to be room for like crypto assets and crypto securities and others down the road as we get comfortable with Bitcoin as a starting point. But again, based on Bitcoin, maybe even Bitcoin as the money supply, that is the price discovery engine for those assets.
Yeah, I've kind of identified 7 main network effects that are all taking place at the same time. You got speculators, merchants, consumers, mining or security, developers, financialization, and then liquidity or world reserve currency or type effect. And like all 7 of these are taking root at the same time. And I mean, we look at email. I think it's first implemented in 1982. It's a far inferior protocol compared to others that we have out there. I mean, even BitMessage, which is just in beta, I would say is better than email because one, you're less likely to get spam due to the proof of work that's within it. Two, there's no metadata. And three, it's private and encrypted by default. And four, you know that the message is only going to the intended recipient or from the sender, unlike being able to spoof email. So it's a far superior protocol, and yet nobody's really going to move or switch over to it because of the network effects that email has. And yet Bitcoin's got network effects going across 7 different areas all at the same time. And then disrupting all types of industries all at the same time. I mean, it's not just a minotaur in the sense that it's both a currency and a payment system. And it's almost a phoenix in the sense that, you know, we had the inadvertent hard fork and we've had Mt. Gox and we've had Silk Road and all this stuff that's tried to kill it. And it just rises from the ashes even stronger. But it's also a hydra, you know, it's not just a Trojan horse, it's a hydra like in all these different industries all at the same time. Because now that we have this blockchain technology, we have to go back in time and think, how would we have built everything differently if we had this technology then? And then that's what we're going to have to reconstitute or reconfigure. You know, it's very exciting because now we've got Bill Gates, for example, you know, December 2013, national TV says Bitcoin is a techno tour de force. A year later, Microsoft accepts Bitcoin for Xbox. Number 2 market cap company in the world, like saying, you know, we're just dipping our toes in here, but we see lots of potential future applications with it, and we're going to start allocating resources here. So once those resources start getting allocated to Bitcoin, like what other protocol could possibly begin to challenge it?
Exactly.
Is there anything else, you know, kind of got off on a tangent there, but I'm glad to find somebody who's also got kind of a similar viewpoint that like, you know, we've largely passed the point of no return. Like Bitcoin will be here in 20, 25 years, and it's going to be huge. It's just a matter of like finishing the marathon now.
Yeah. And, you know, I just caveat that with people, you know, the normal consumer won't be using the word Bitcoin in 25 years, but Bitcoin and blockchain will be powering our global commerce and capital markets. And there will be a subset of transactions that maybe BTC or XBT or whatever acronym we come up with, bits and whatnot. But, you know, I think generally people and companies both gravitate towards trusted brands, right? And in the payments ecosystem in the first world, that's your Visa, MasterCard, Amex, to some degree PayPal, right? And then in the developing world, it could be, you know, M-Pesa, right? And so forth. So there will still be needs by those large brands to determine, are they going to cannibalize themselves for the next 100 years of growth, or are they going to wait and see if somebody can compete with them and then try to consolidate those companies that compete? So we're just seeing that dynamic play out right now. You know, you got the payment processors are, you know, up and coming. You got remittance services up and coming. And the major institutions out there need to make that strategy call. Are they going to cannibalize their own business in the hopes of saving their own business? But in my opinion, genie's out of the bottle. There's no turning back on what this technology and what the network effects and the infrastructure behind the technology has already set in motion.
We see the trajectory. This is where it's going. You know, it's been an excellent interview. Thanks for taking the time. We've had Will O'Brien, CEO and founder at BitGo. Thanks for being with us.
Thanks, Trace. Great to be here.
Be sure to get a copy of the free Bitcoin Guide at freebitcoinguide.com. Got a question or suggestion? Record your voice at bitcoin.kn. Don't be shy. To help the show, share bitcoin.kn with friends, post about it on Reddit, and otherwise spam the interwebs. Your iTunes comments and 5-star reviews are very important to us. Please continue tuning in to the Bitcoin Knowledge Podcast, where we release interviews with the top people in the Bitcoin world. Now take some choline and let that Bitcoin knowledge consolidate.